Good morning. It's Market Day Report. So glad you're with us here as we're working our way towards the weekend. Hopefully you've got big plans this weekend. Now, speaking of the weekend, after the close today, we get a cattle on feed report from USDA. It's interesting because it comes out after the close, so we can't trade it till Monday morning. What we can trade in the overnight session, the corn market. Let's start there. And we do see higher trends here, up a penny 3/4 on that December at 425.5. This is a market, though, for the daytime sessions. It's closed lower now for 2 consecutive days. Same kind of trend here for the beans. November has been lower 2 straight sessions, but the overnight up 3 at 1040.5. Well, wheat wanted to get in on it as well. It's been lower 2 straight sessions, daytime trading sessions, and D's overnight 524, down 1 tick. Hard red, the old crop December, half penny lower, 509.5. And then the cotton market, guess how many days it's been lower? Yep, 2. It's 28 lower in the overnight session, 66.62. So what could drive the markets today? Brian Hoops is president, Midwest Market Solutions. Where do we start?
Well, Tony, good morning. We have a lot of news we can talk about this morning. First of all, we had a flash sale of corn, 206,000 metric tons sold to an unknown destination. That's our third sale this week of corn. No soybean sales or wheat sales. So it should be a little supportive to the corn market that as we go into the harvest here, we should continue to see some decent export business. And we're disappointed we haven't seen much in the way of any soybean sales so far. Also this morning, it was expected that President Trump, President Xi would be speaking about 8 o'clock Central Time. They started already. I think they got started a little bit earlier in the 7 o'clock Central Time hour. And so that talk is ongoing. Of course, the trade would love to hear reports of some sort of a trade agreement. It's probably not going to happen today, but it would be certainly a friendly news item if we were able to reach an agreement with China for them to secure U.S. ag products. Now, there was a trade agreement announced this morning. Our Ag Secretary Brooke Rollins announced on Twitter that Taiwan has agreed to purchase $10 billion of U.S. ag products, including corn, soybeans, wheat, beef, over a period of 4 years. She called it a game changer. I'm not sure I would clarify this trade agreement as a game changer. I think they bought over 3 billion metric ton or $3 billion worth of product last year alone. So I'm not sure that this is all that much of a game changer for the farmer. It's great that we have a trade agreement and it sounds like a lot, but I'm not sure that it is as great as what they are touting it to be because Taiwan has been a consistent purchaser of U.S. ag products. So yeah, we have a lot of things to talk about. One of the big things that we've been talking to clients about is if they're able to harvest this week, they're uncovering yields that are much worse than they expected, much, in some cases, much worse than last year. If you have that southern rust, it looks to be a bad case this year in a lot of areas. And even if you sprayed fungicide down, it is robbing yields. So I'm really getting more and more confident that these USDA yields are still overstated.
Okay, good points there. Hey, Brian, let's take a quick break. We'll come back in a moment. We'll pick up the conversation with the livestock market. And again, cattle on feed report coming out today. We'll have some projections for you as Market Day Report continues in a moment. So cattle on feed report set to come out at 3 o'clock Eastern time. So what are we thinking? Well, average trade guess about 99.1 for the on feed, placements at 91, marketing's 87.1. Now there are multiple guesses, projections out there. So we'll see what Brian's hearing in just a moment. Let's go to live cattle. We turn things around. Yesterday, after 2 days of lower trade, the October live cattle contracted 232.40 was $1.30 higher, 152 higher on the D's at 234.20. Now over to the feeders, and feeders higher as well, up 337 front month September. It expires here in a couple of weeks. October at 352.07, up 295 in the November at 347.47, up 335. Finally, over to the hog market. It also broke a two-day losing streak on the 2025 contracts, though April and May were lower. Brian Hoops is president, Midwest Market Solutions. All right, Brian, cattle on feed. Any chance we'll get a surprise?
Oh, very good chance. I think there will be some sort of a surprise. The trade is anticipating placements are going to be down, and we think they're going to be down. The question is how much. Trade's looking for 8 to 10%. It could be more, it could be less than that. Likely that's where the surprise is going to be. There was one day less last month to place and market cattle in, so take that into account. Maybe it comes in higher than what the trade's expecting. On-feed numbers should be smaller, but even if this placement number is close to where the trade is expecting, that's going to be a 10-year low in placements for this month. So overall, it looks to be very supportive for the trade. Cash trade got underway earlier this week, and we continued trade on Thursday. And we've noted that cattle supply is much tighter in the south than what they have been, tighter in the south than the north. And we traded lower on a dress basis yesterday, but pretty much steady with last week in the south. And that's what gave us that late day rally, 340 trade. And we probably will have some cleanup trade in that 340 area, but it's a southern trade that's a little better than the northern trade this week. Packer margins certainly really hurting this week. We're down to about $120 a head in the red. And again, we're going to have to change something there going forward. I think Packers start to cut kills in the next couple weeks, trying to improve the boxes. They're falling right now, and they need to kind of find some support for those box beef. But we'll be watching that cash trade to clean up today, and of course that cattle and feed that comes out at 2 o'clock.
Hey, Brian, I want to go to a market I don't normally talk about, but it's in the equity side, and it's the Russell 2000, because we've seen some all-time highs here, record highs in the Russell 2000. What are you watching in the equities?
Yeah, I believe the September contract goes off the board here very soon, sometime this morning, or the last of the roll will be completed. December is the lead month, but sometimes you get some weakness when that happens. So wouldn't be surprised to see what is right now a higher opening, maybe even reversed by middle of the morning to lower prices, and then we can maybe start to see some strength. But we've been hitting multi-year highs, all-time highs here this week in the S&Ps. Probably will continue. We know the Fed has cut rates. That's bullish for the stocks. Normally, even if we see some weakness, I think that will be bought by the trade, anticipating maybe additional rate cuts and additional gains in the equity markets.
All right, Brian Hoops, President, Midwest Market Solutions. Again, we'll keep an eye out for the trade in front of the cattle on feed.